All right, this is a day off. This was a day off for me today from day trading until Asian market opens and gets going. I took some time to reflect on the bigger picture of the silver, which I talked about in my prior video. This market is moving up very strongly, clearly, and buy every dip with vengeance is being active right now. I do believe that when you start moving for almost 4.5% on the day to the upside, reversing a few days, 2 or 3 days of selling all in one day, this is a very strong market. Now, I did want to talk a little bit about intraday trading because silver is something I used to trade. It's a very attractive commodity to trade, day trade, that is. So let's take a quick look at the dangers and the possibilities. So first of all, this was from let's say from the market close on Friday from 9 p.m. Thursday all the way until 9 p.m. later. This was a nothing. This is very hard. This is a 3-hour time frame. This is very hard to trade. Clearly, there was no direction. And after the fact, of course, a trader who loves to trade ranges could gloat and say, "Oh yeah, I bought here and I sold here, did over and over again, and made my 25 grand in one day." Yeah, okay, it's doable. Of course, it can be done. This is not the kind of trading I want to get caught up in because it's possible to get blown up very quickly. Now, once we got directional, what I'm going to do is take a look at the price, the distribution of where the orders. Okay, so this is what happened here. This is where a lot of trading happened right here. Less here, a lot less. Okay, so this is why price action trading works with metals in general, but it also works so nicely with silver, is because once we took out this low right here, we cut right through. So this is where the stops would have been sitting under this area. Boom. Again, take out this level of consolidation. Boom. So it kind of moves in, it's almost like impulse drive. Nothing, nothing, boom. Nothing, nothing, boom. Now, one of the qualities of metals is in particular, and certain forex pairs, is they put up a tremendously attractive bigger price structure. Now, in order to be able to see the bigger price structure, it is very important to zoom out. It's like that. You want to see the mountain and the sky, so you don't want to be looking at the twig that's right in front of your face, right? So what we're doing here is observing this kind of a potential behavior, where this is clearly the end of a sell-off, classic inverse head and shoulders. And once we broke hard. There's always a late seller who comes in and tries to fade the move, clearly fade it, and then boom. So most of the excitement, most of this massive run up actually happened in 1 hour. Okay. So that was worth about 5 grand per contract in 1 hour. All right. What we're gonna do is do percent. Take a quick look. So 3.5%. So 1 hour is when it was done. All right. Now, this is how silver tends to move, which is why it's so important to keep things in perspective. It's a little bit like if Nasdaq and natural gas had a bipolar baby together, and this is how it behaves. It's really powerful when it's on, and it's really hard to understand when it's off. Okay, and can be very, very, very convincing. So now let's take a look at the 60-minute time frame. Again, as I mentioned, here is that big price formation, which of course would be lost if we're looking at just trading minutia. And another thing that is very, very important about silver, especially silver right now, because it's a buy everything frenzy kind of a market, just being overbought on the day at R2 and above doesn't mean that we should be looking to sell. Quite to the contrary. This is all about chasing momentum, and chasing momentum with vengeance. So from the perspective of pure intraday trading, we're going to take a look at the 10-minute in a second. But it's fair enough to acknowledge that the moment Asian markets got going, silver was bid Sunday night. Again, I don't like trading Sunday night. And then finally took out this consolidation and boom. And it was basically over 1 hour and a little bit worth of action. Now, what I like to do here is to try and ascertain whether we're going to get much of a pullback, so I can try and get in at a slightly bit better price later. So in this case, what I would be doing is looking at something like that. Let's see where the gaps are. Well, there is a bit of a gap here. Of course, no surprises, because once we blew through this resistance, boom, there was just a void. The price just blew out, and then spent a fair bit of time at R3. Then the buyers came in, big time buying came in towards the end of the session, and created another gap, pushed up again, and boom. Now, are we likely to see some correction? Sure, possibly. Let's just take a look at the 10-minute time frame. Now, 10-minute time frame is pretty much exactly the same. It took off around 5:30, 5:30 West Coast time. Left, this was all still thin volume right up until 6:30 in the morning, when the traders came in, started to buy with vengeance. Possibly there may have been some short covering, because of course the last couple of days before, silver was selling off really hard. So yeah, possibly the traders came in and started covering their shorts by going long, which is what happens, which typically is what drives the price higher. And the fact that there was almost a gap in this area is also highly suggestive that this was a short covering. So the first leg of the move was short covering, then the sellers came in a little bit and quickly got blown up again, and another bout of short covering most likely, and it was over. And the price traded from 6:45 to 8:30 in the morning around that R3 pivot. And guess what happened? The buyers came in and pushed it hard and blew up the stops that were sitting above all of this level. And the price surged through, left a gap, and basically kept on consolidating for the rest of the day. So this is how silver moves. So now that we are clear about how silver moves, now I assure you that silver traded the same way for the past decade and a half. When it's moving to the upside strongly, it trades like this. This is what it was like for me when I was trading it, when it was heading towards $50. It was exactly like that. This is exactly how the oil market traded in 2009, when it was heading towards $150 a barrel. This is kind of the frenzied way of engaging. And there is a very harsh way of cleaning clocks. Everyone who sells around here thinking it's overbought gets stopped out, it blows through. Now, what is this one candle worth? Well, let's find out. So now we're in a 10-minute time frame, okay? So buying around here and selling at the end of 10 minutes is $850. So this is an $850 candle, all right? It's kind of staggering in 10 minutes. That's why I say it's like a cross between natural gas and NASDAQ futures. Okay, one more time. So what if we chased it up a little, bought here, and held on? How much heat would we be taking? Well, about $675 worth of heat. So this pullback was worth $675. So no, that would be outside of my generic $450 risk management. Now, it's very important for me not to blow up my Apex trials. So if I start trading with $600, $700, $800 risk, it gives me less playroom, even though I have a $6,500 wiggle room. It's not that hard to blow through it, to chew through it if you start taking huge risks. So it's not ideal. Also, what's not ideal is going to a faster time frame, because then the noise gets bigger. It's the ratio of directional component to noise. It's actually almost like signal to noise ratio. the signal becomes weaker and the noise gets greater. So the signal to noise ratio is worse, not ideal in my opinion. That's the only reason. That's the only reason. There's nothing wrong with trading on a 1 minute time frame, except for the fact that it's not as directional and it's more noisy. So it's harder to get good signal. Now, what isn't harder is to understand that just because we're at R3 and above it, up to the moon and up 4%, doesn't mean that it's a good time to sell because it's overbought. A lot of traders see the big indecision bars and they get excited thinking, well, if I sell it, it's going to pull back to 31 and a half. I'm going to make whatever. I'm going to make $5,000 or whatever it is that they think they're going to make by fading right here. Yeah. They think, wow, it's going to come back and I'm going to make $2,500 in this one trade really quickly. And of course, the next thing that happens is you get your ass handed to you, right? That's exactly how the whole thing works. So don't start fading silver just because it's up 4% on the day. It doesn't work that way. This is not a normal market. We're not in a normal market here. The price does seek liquidity. More importantly, the price seeks the losing trader because it will move in the direction where it will hurt the most traders, because when the stops get tripped, the price moves further. This big move here was probably short covering from here. And this whole big run up probably was short covering from here. So the price actually doesn't seek true liquidity in a sense because it's not a currency. What it does is seeks to find where the losing trader put their stops. And it will go in the direction where it will hurt the most losing trader. So it's completely tradable. It is very, very attractive. And what's really attractive is reading the order flow. That is where the money is made trading silver. Forget about overbought, oversold. That's why I'm not even using overbought, oversold oscillators, because they will kill you. Think about where the losing trader is positioned. Think about where the stops are. Take the other side of the trade. That's all there is to it. Look at the price action, look at the tape. I'm going to start trading silver in my live account, and we'll see how I do moving forward. Now, again, this is not about cheap excitement. If I wanted cheap excitement, I'd be trading options on some obscure internet stock. This is serious business, and I think over the next maybe few weeks we will have a very strongly bid silver market. So let's find out if there is any money to be made pure day trading it.